Assalamu alaikum. Let's we talk about CVP analysis. CVP stands for cost, volume, profit analysis. The CVP analysis examines the behavior of total revenue, total cost, and operating income as changes occurs in the unit sold. Also with the changes occur selling price, the variable cost per unit, or the fixed cost of a product. As we know, we can calculate the operating income as follows. We have total revenue, then we deduct the total cost from the total revenue and we get the operating income. As total cost is the sum of fixed cost plus variable cost. So we can replace this total cost with the fixed cost and the variable cost, and we can get the new equation as total revenue minus variable cost plus fixed cost is equal to operating income. So it could be total revenue minus total variable cost minus fixed cost is equal to operating income. As total revenue is equal to the product of selling price per unit and quantity sold, and the total variable cost is the product of variable cost per unit multiplied by quantity. So we can replace the total revenue with this selling price multiplied by quantity, and variable cost, total variable cost could be replaced with variable cost per unit multiplied by quantity. The fixed cost remains the same. So when we express the CVP analysis, the relationship between total revenue, total cost, and the operating income as per the changes in this quantity, selling price, and variable cost per unit or the fixed cost occur. So this relationship expressed in this equation is called this expressing the CVP relationship or the CVP analysis in equation method. This is the first method to express the CVP analysis. A total of 3 methods are there to express the relationship between revenue, cost, and operating income. The first method is equation method, which is given as selling price multiplied by quantity, collectively known as total revenue, minus variable cost per unit multiplied by quantity, collectively known as total variable cost, and then we deduct the fixed cost and we get the operating income. And expressing this relationship in equation is known as the CVP analysis via equation method. Let's we move towards the second method of CVP analysis, which is contribution margin method. Let's start with the basic equation, which is total revenue minus total variable cost minus fixed cost is equal to operating income. As we said, total revenue is equal to selling price multiplied by quantity. Total variable cost is equal to variable cost per unit multiplied by quantity, and then minus fixed cost is equal to operating income. In these two terms, you can see quantity or the number of units sold is common. So we can get the common selling price minus variable cost per unit and minus fixed cost is equal to operating income. So look at here. It is given as selling price minus variable cost per unit. This is basically the contribution margin per unit. As we know, total revenue minus total variable cost is contribution margin in total. And if we get the revenue of a single unit, which is the selling price, and we deduct the variable cost per unit, and then we get the contribution margin per unit. So we can replace this term with contribution margin per unit multiplied by quantity minus fixed cost is equal to operating income. So this is